Let's go ahead and open up the Trading 212 app on my iPhone as always and run the portfolio page. So this past week, I never added any more investments to my portfolio. I never added any more of my savings into any of my investments either. So I didn't really do much this week. It was more me sitting back and just watching how things were happening. So if we check my portfolio value here, so it's currently sitting at £5,855.57 in total. So again, invested £5,612.37, and my returns currently showing £243.20. So the portfolio is growing since I started investing by 4.33% overall. We're still in the green, which is really good news. Lots of other investors I've seen videos are firmly in the red. So I guess that's something that's positive to mention. ISA utilization, because I've not added anything else, it's still 21%, so that's not changed. So let's go down into my investments as always and see what's been happening there. So first investment we're going to look at here is my American Airlines, and if you've watched the previous videos you'll know that these were 2 free shares that I received when you lovely people signed up through my referral links, and I ended up getting 2 free shares with American Airlines. And I'd like to mention I was extremely lucky with the timing of receiving these free shares, because I received these back in May. I think it was the 12th of May there and about the 13th or 14th of May, and that was literally when it was at its lowest point for the 3 months. I just wish that I had bought in, using my own money at that point there, a lot more shares, but sadly I never, because it went shooting up there, up to around the $20 mark. But again, hindsight and all, you can't win them all. I'm still grateful to get the free shares, especially at that price. So going back to American Airlines, let's look at them for this past week and see how it's been going. So it's not been looking good. They've been dropping constantly throughout the week. And if we take a look why here, it's again, as you can imagine, it's all tied to the whole COVID-19, the coronavirus pandemic that's shut the world down. And because there's been a lot of recent surges mentioned in the US, it's been affecting more and more airlines. And American Airlines isn't the only one, but it's the one I'm talking about here, obviously, because it's the one I'm invested in. And it just goes on to mention, because there's cases that have been shooting up, the shares of American Airlines sank 6.1% in afternoon trading Wednesday, and they've now shed 35% since closing at a 3.5-month high on June the 8th. So I'm just going to hold these 2 shares I've got in American Airlines for another few months at least and see what happens, see if they start to climb back up, and then I'll decide what I'm going to do, if I'm going to buy in more shares with my own money or if I'm looking to sell them. Let me know in the comments below if you've got any stock in American Airlines, and if you do, what's your plans? Is it a long-term hold for you? Are you looking to get rid of them soon? Are you in profit with them? Just let me know in the comments. It'd be interesting to see your guys' opinions. So let's move on to my second investment here, Hives Group. And like I said in my previous videos, if you've watched them, this was a complete gamble for me. I purely bought into this because it was so low in price, something I don't recommend you guys really do. And it's not worked out too well for me. It's just dropped since, so I bought in around this point here, and then it plummeted even further and started to climb, but it's not really got anywhere else since, so not too great. So we're down 9.39%, £2.72. Got 25 shares that are worth £26.24. And if we take a look here to see this past week especially, the reason they have dropped more and more in price is because they've had to cancel further events, and that's all tied once again to coronavirus, whole COVID-19 pandemic, and all their uncertainty. So they did have a big event planned that was all going to be booked, something called Shop Talk. I'm not too sure what that is, but that was postponed originally from March 2020, and it was going to be happening in September 2020, but that has now been cancelled, and it's not going to be returning until March 2021. And that's all due to coronavirus. So again, that's screwed things up here, and that is why the price has continued to plummet this week. Not too brilliant, to be honest, but we'll hold out and see if they start to climb, and it might be one that I'll look to sell out of sooner than later, but we'll just have to see how things go over the coming weeks. Next investment we're going to look at here is the iShares Core FTSE 100 ETF. If you've watched previous videos, you know this is my first investment on the Trading 212 platform, and it's one of my biggest holdings. I've got £1,607.07 invested into this ETF, and it tracks the top 100 companies in the UK. And if you're wondering why it's such a weird number of units there, so it's saying 265.4998501 units. That is because I used to have, I think it was around 260 units, and then I did something here on Trading 212 called value buy. So you can switch from either a value buy or a number of units. And the value buy is where you specify the exact amount of money you'd like to invest. And there was one point in the past, recently, when I think I can't remember the exact amount I had in my account, but I decided to use up what was remaining in my free funds balance to buy in more units with this ETF. And I ended up getting a random amount. So as you can see there, it's like 9.24 units. So whatever that amount came to, it resulted in my units being with this weird decimal point of 4995850 units. And yeah, it kind of screws up my OCD, to be honest. It's really annoying me, especially when I see my other shares. It's all like whole numbers of 2, 25, 60. And then I've got my iShares core, FTSE 100, that odd, weird number. So I'd love to try and get it back to even 265, 270 units just to even things out so it looks nicer. But regardless, I'm maybe overthinking this whole thing and being a bit daft there. Anyway, with that out of the way, let's go into this investment and see what's been going on this past week. So it started off the week and it looked like it started to climb. So on the Tuesday, and then what happened here, Wednesday, it dropped, and then Thursday it dropped, and it looked like it started to climb up a little bit here come Friday when the markets opened, and then it dropped again. So why is that? Well, it looks like the whole coronavirus pandemic again is to blame. Not really something we should be surprised about at the moment. It's got a lot to answer for with everyone's investments right just now. So the FTSE 100 closes in positive territory. This was last week, but it gives up its gains as US stocks sink on health fears. So if we look into this a bit more to see what was going on, and like I say here, this is news from last week. FTSE 100 index closed in positive territory on Friday, but gave up earlier gains as US markets tanked on fears that states would have to go into lockdown once again amid rising virus cases. Stocks lost ground this afternoon due to health concerns in the US. FTSE 100 is still up on the day, but it has handed back much of its gains as the US markets are weighing on sentiment. So yeah, basically because of all these health concerns and fears that's picking up again in the US, and I think they actually had one of their highest days of reported COVID cases. I think that was last week. I can't remember exactly which day it was. But due to all this, it has had a knock-on effect with the UK market here, the FTSE 100. And that is why, if we go back here, you'll see it did start plummeting midweek and it never really fully recovered. But overall, I'm still happy with my FTSE 100 investment here. Take you down and let you see things in more detail. So I've invested, like I said, £1,607.07 in this ETF. It's currently showing a return, £129.50, which is 8.76% up, again in the green, which is always good to see. And I was taking into the history of this. So like I said, first investment on Trading 212 was the 2nd of April, and I bought 200 units in this ETF, which is when it was actually at one of its lowest price points. It was down to 539p per share. And then I continued to buy throughout this whole lockdown we've been going through in the UK. And I am going to continue to add to this ETF. I want to have this as one of my long-term holds for sure. We're going to have to keep our eye on this and see how things go over the coming weeks. So let's move on to the next investment in portfolio, which is the iShares Core S&P 500 ETF. Now, if you've been watching my previous videos, you know this is also one of my biggest holdings, and it's going to stay that way. I'm not looking to get rid of this anytime soon. It'll be definitely one to hold for a long number of years. The S&P 500 tracks 500 top companies in the US market. I've just realised my battery's at 2%, so I might have to stop this in a minute, charge my phone and come back. But we'll see how we get on here. So my investment, I've currently got 60 units in S&P 500, which is a total of £1,466.68. And I'm currently showing a return of £82.27, which is a 5.94% increase in overall. Again, it's in the green, good news, that's what we want to see. My first ever purchase into this ETF was back in the 7th of April. So I actually bought 11 units that day, and I managed to buy in at the price £2,216 per share, and it's now sitting at £2,446 per share. So you can see how it has continued to climb for me, which is good. But looking at this past week, looks like Monday near the end of the day for the markets here, because this is traded on the London Stock Exchange, which is important to know here. So Monday near the end of the day, it did start to climb up, and Tuesday morning the market opened and it continued to climb. Leading into Wednesday, it started dropping here, and it looks like it did the same Thursday all throughout the day. Actually plummeted right down here on Thursday morning. My batteries now went to 1%, so I really need to chop on here. And it kind of continued like that throughout the week, and it finished the week at 2446.26. Okay, so I've got my charger plugged in now, so hopefully we're good to continue. Unfortunately, I've had to unplug my headphones with the built-in mic because I've got my charger plugged in. So hopefully this will still sound okay audio quality-wise, but even if it doesn't, we're going to crack on here and get this done. So surprise, surprise, it looks like the S&P 500 was most affected last week thanks to our best friend coronavirus once again. It mentions in this article here that thanks to the biggest one-day surge in coronavirus cases in the US and how it has constrained the US economy's reopening process. So all these things again tied to the COVID-19 and how there's no doubt that news of a second wave has been extremely glum. It's looked like it's going to continue to be that way for some time. Something that I always wonder is how can they be talking about a second wave when it looks like the first wave's not even run its course yet. Something I always question when I hear talks of a second wave picking up. And then it goes on to mention further down in this article how the biggest one-day coronavirus spike in the US, and it talks about the coronavirus cases reaching their most significant single-day surge with 39,000 people testing positive for COVID-19. So that was again last week. It was possibly on the Thursday, which could explain why the share price dropped so significantly. If we go back to Trading 212 here, I'll show you guys what I mean. Yeah, so it dropped significantly down here to 2421, and that was Thursday when the markets opened the first thing in the morning. So yeah, again, it's all tied to the coronavirus, and that is why it hasn't been the best of weeks for the S&P 500. But again, it's one I'm going to hold for a long number of years, and I'm not looking to get rid of it anytime soon. The next investment we're going to talk about here is the iShares NASDAQ 100 ETF. And if you've watched my previous videos, you'll know that this was one of the ETFs I always wanted to get involved with, but I was always put off by the price. It's an extremely pricey one to buy into. And I'll just show you what I mean here. Even one unit in this ETF costs you £453.98. But you'll understand why in a minute when you see some of the companies that make this ETF up. I actually bought in when it was around the £430 mark, so it has climbed since. And if we look here, you'll see that I'm actually up £21.43 since I made that investment, which is a 4.96% increase. And just so I can check here, because I'm forgetting when I bought this. Yeah, so I bought in at the 2nd of June this year, and that's what it cost me, £432.12. So let's see how things have been this week. So it finished overall this week down 1.09% from last week. And we're now at the 45,398 per share mark. So yeah, it's looking like it's been a pretty volatile week for the NASDAQ 100. It has climbed significantly during the start of the week, and then it started to drop, and then it plummeted again onto the Thursday, which is probably tied to the fact of the highest cases of COVID-19 in the US, like I talked about earlier, and then did start to climb again, and then it finished the week there at the 45,398 a share mark. And there's many articles online mentioning that the tech stocks, which is basically what the NASDAQ 100 is, it's the top 100 non-financial companies in the US. And a big bulk of it is made up purely of technology stocks, continued to surge despite the disruption caused by this whole coronavirus pandemic. And just a bit more detail here about it. So the NASDAQ 100, a listing of the 100 largest non-financial companies, finished up 2.02%, surpassing previous record closes. And this features tech giants such as Microsoft, Apple, Amazon, Netflix. And part of the reason why the NASDAQ 100 has been doing quite well recently, despite everything with coronavirus, is because technology, as you probably know, is playing such a huge part in everyone's lives, even more so right now. We're all using technology more to communicate. Everyone's working from home. We're doing Zoom meetings. We're doing team meetings. It's just a big technology bubble right now, and even those who previously never really bothered getting involved with technology, maybe besides just using your phone, have now been thrown into this world where technology is absolutely vital. So as it says here, right now a lot of people are seeing other people extremely optimistic about technology because companies seem to be faring better than most others, and that is technology companies. There's even talks here of this chief investment officer for Advisor Alliance. He has said that technology companies that figure so much more prominently in the NASDAQ 100 have weathered the COVID-19 storm so much better than a broad-based cross-section of US companies. And like I said, it's purely down to everyone using technology so much more. It's people staying at home, ordering more things off Amazon. Everybody is doing their work from home that can, and it's just seen an absolute surge. Those technology companies that can thrive in a work-from-home environment are likely to outperform those companies that require people to get back together to assemble in public, such as your airlines, your hotels, your restaurants, casinos, sports stadiums, etc. So yeah, it's really common sense when you think on it. If you can stay from home and use your technology instead of going out, and obviously if you're going out in public, that's affected big time right just now with coronavirus. But if you're safe in your house, on your computer, on your laptops, on your devices, then you're not going to be affected by the coronavirus pandemic. And the companies that focus a lot on their technology and have that as a backbone to their business are obviously going to fare better than those that rely on footfall coming into their shops, or those who require a large number of people to be in a certain place. So that's a NASDAQ 100 for this week. If you're wanting to invest in the NASDAQ 100 and trade in 212, the ticker symbol to look for this particular one, which is the iShares NASDAQ 100, is CNX1. It's one that I definitely want to add to in the future, but given the high price, it's probably not going to be something that I'll be doing for a while because, like I said, it is extremely expensive to buy into. Now, I'm not going to go into too much detail on the rest of these investments because this video is already getting too long. I really need to work on structuring my videos a little bit better. But as I've said previously, I'm still kind of new to my YouTube videos. I've not been doing this for too long. But let's go into here, the iShares S&P 500 Healthcare. And this week has not been too great. I'm actually in the red for this investment. So I've got 25 units here. I'm currently down £7.26, which is a 4.7% decrease in this investment for me. So I'm not really looked into the reason for this, but I'm guessing thanks again to all this high number of positive cases in the US and the fact that the US had reached its highest number of coronavirus cases last week, this has probably had a big knock-on effect here, hence why it's plummeted so much. But I'm going to keep hold of this one. I'm not looking to add any more into this investment at the time being. And ideally, what I'd like to do is maybe get a more diversified healthcare investment of some sort. So if you guys are currently invested in healthcare on Trading 212, leave me a comment below and let me know what it is you're invested in. This healthcare ETF has some of the biggest health companies in the US. So Johnson & Johnson's one of them. I did consider maybe just investing purely in Johnson & Johnson on its own, but I never did because I like the idea of the ETFs do kind of avoid having all your eggs in one basket. But I'm definitely interested in finding out some other ones that I can use in my portfolio. Next investment here is Legal & General Group. I've had this one for quite a long time now. If you've watched my previous videos, you'll know that already. Looks like it's been quite up and down, just like most of my other stocks this week. It's down 2.43%. So I've got my 145 shares in Legal & General Group, which is currently showing a return of £18.84, and it's 6.38% up overall on my portfolio. And I actually received a dividend from Legal & General Group not all that long ago, and I can show you that here in the history. So I received a dividend of £12.64 on the 5th of June, earlier this month. So that's Legal & General Group for this week. A good stock that I'm planning to hold for a long time. It's a good dividend paying stock as well, so no plans to sell this anytime soon. MGM Resorts is my next stock we'll talk about here. Again, another one I totally gambled with, to be honest, and again, it's not paid off so far. This week is looking extremely bad for them. It dropped significantly on Wednesday and continued to do so throughout the week. Most likely, once again, tied to COVID-19 and the high number of cases that have been getting reported in the US lately. MGM Resorts rely on footfall. They rely on people getting in their casinos and their resorts and gambling their money and all sorts of things like that. So obviously, if coronavirus is still playing such a key factor in preventing people from getting to these places, it only makes sense that their price will drop and people will be selling out of their investments, which is likely what has been happening this past week here. So my investment of 5 shares, which equals £63.62. I'm actually down right just now. It's one of my worst ones, and £26.11, which is a decrease of 29.10% overall for this investment. So not looking good at all. I might wait until it starts to climb up again. It might take a long time, I know that, and then look to sell out of this investment. It really just depends how things go, especially over the coming weeks, over the coming months. But we'll see what happens there. But I'm not planning to add any more to this investment right just now. Like I said, it was a complete gamble, and this is why I think it's always important to do your research on your stocks. And evidently on this one I didn't. But it might pay off in the future, and if it does, then it might not all be bad news. National Grid's next up here. So my 3 shares. These were free shares that I received, again, from you lovely people that went through my referral links and created yourself a Trading 212 account. So I've still got my 3 shares here. Extremely volatile week, up and down, up and down, up and down, all throughout the week. And we're now sitting at the 966 pence mark per share. So these 3 shares that I've got are currently showing a return of 71 pence, which is up 2.51% on my portfolio for this investment. And it's not one that I've bought into personally with my own money, and I probably am not going to do so. I'll keep hold of these shares and just see how they do. I might even do a video on all my free shares in the future and just see how they've been performing. But for the time being, I'm happy to keep hold of this one just to see how it all plays out. It looks like it is climbing if we look at the year view, but whoever knows if it will get back to the highs that we saw here. But yeah, for this week, like I say, extremely volatile, and we'll just have to see how that plays out in the long run. Royal Dutch Shell is the next one up. Again, one of the biggest holdings in my portfolio. Mentioned this a lot in my previous videos. I also recently received a dividend from Royal Dutch Shell, which I will show you guys if I go into my history of this investment. So that was actually earlier this week. I received a dividend of £9.76 because their dividend date was earlier this week. If you received a dividend from Royal Dutch Shell, let me know in the comments below. Let me know the amount of the dividend you received. I'd be interested to hear if anyone got above the £10 mark for dividends, because if so, that means you're quite heavily invested in Shell. But looking at them here for the weekly view, looks kind of in line with what we've been seeing from a lot of the US stocks. Started to climb at the beginning of the week, and as all these health concerns with COVID-19 in the US started to increase and get worse, and the spikes, surges, etc., it reflected a lot here with the price, and things started to drop. So again, one I'm going to be holding for a long time. No plans to get rid of this anytime soon. I'm talking at least 5 years, if not more. 5 to 7 to 10 years at least. And I will be adding more shares to this at some point. But right just now I'm happy with my 78 shares, which is £985.13. Showing a return right just now of negative £8.73, unfortunately. So next up here is Under Armour. This was a free share I received when somebody obviously signed up through one of my referral links. And I received this free share on the 16th of June, and it's now currently showing a return. I'm actually down 81 pence, so 9.9% down since I received it, and the share price currently sitting at $9.11. So if we look at the weekly view, it has been extremely volatile, like most things this week, and it's now finished at 9.11. Not really sure what I'm going to do with this investment. I might just hold it and keep tracking it like I'm doing so with my other free shares I've received, just to see how they play out. No plans to really buy into this one myself. It's not one I really follow. So yeah, we'll see how this one goes really. Another gambly, risky one next up here, Alaris. This is an offshore company, and they are not doing well at all right just now. I've not heard any good news about them. Looks like they might be going bust, but I've not really been following the latest news as such, and it's probably a good thing I'm not, because I'm sure it's nothing but bad news. This was, again, like I said, a complete gamble, purely because the price dropped so low, but thankfully I never put too much money into this one. I only put in £14.57, which actually bought me 26 shares, crazily enough. This shows you how cheap I managed to buy in at them with. So the weekly view is not great. Big drop here, Monday, Tuesday into Wednesday. Started to climb on the Thursday, and then it kind of dropped again. Doesn't look like anything is going to come from this, so I might just have to sell out this one soon and take it on the chin. And then finally here, we've got my Vanguard FTSE Emerging Markets. I've got 16.5 units in this ETF, and this tracks a lot of the emerging markets around the world. I think it's a good investment to have in your portfolio because it really helps diversify your portfolio. It's not like all your eggs are purely in the UK basket or the US basket. You're then also invested in the emerging markets. It is definitely a riskier stock to hold, but with the risk comes more reward. And like you see, I've got my 16.5 units, which is 720.89 pence worth. Currently showing a return of £61.06, so it's growing by 9.25% overall in this portfolio of mine. But from last week, it's actually down 0.61%. And I can only assume that is again tied to the coronavirus cases, all these talks of a second wave, and the fact that things are not yet back to a normality stage that people are hoping for. I will be adding more to this investment at some point in the future, but not anytime soon. I'm going to wait until the news around the whole pandemic sorts itself out a little bit and see how things go from there. But I'm definitely always going to have this in my portfolio, just like I say, for the diversification aspect. If you're also invested in this ETF, let me know in the comments section below, or maybe you're invested in a different emerging markets ETF. If so, let me know what they are, because I'd like to look into them as well, just to see what else is out there. This is one of the most popular ones I know of, and that is purely why I invested into this ETF. It's my Trading 212 portfolio update for this week. Putting out there a bit later than usual. It's now Sunday night, and I'm just the way I put it out just now. I usually try and get these out on a Friday/early Saturday morning, but that did not happen this time, sadly. I'll finish off by taking it down to my allocation view again. So my 13 investments, got the FTSE 100 taking up 27%, iShares Core S&P 500 taking up 25%, Royal Dutch Shell's taking up 16.82%, FTSE Emerging Markets is 12.31%, the NASDAQ 100 at 7.75%, Legal & General Group's taking up 5.37%, iShares S&P 500, the healthcare sector, 2.51%, MGM Resorts at 1.09%, my free shares in National Grid at 0.49%, Hives Group at 0.45%, and other, which is basically all the other investments which are such a low amount they can't really lump them together as their own, such as Alaris, under Armour, etc. They are taking up 0.72%. So that's how things are looking. If you enjoy these portfolio updates, please subscribe to the channel. Like I say, I release them every single week. And also check out some of my more recent videos. I've done one recently on the Trading 212 Auto Invest feature, which is actually proven to be extremely popular. I've also got one all about Trading 212 and dividends, how you receive your dividend payments, how you can check when your dividend payments are going to be paid, and so on. So yeah, check all those out in my investment journey playlist on the channel. And like I say, leave me a comment and please click that like button if you liked it. If you didn't like it, click the dislike button. I won't care. I won't get upset. It's still engaging with the video. So yeah, go ahead and click it. And until next time, guys, thank you very much. And hopefully I will see you in the next video.